As we continue our build-up to this year's budget speech, I'm now joined by Rand Swiss Portfolio Manager Viv Govender on what the markets will be looking out for in the Minister's address. Mr. Govender, thank you so much for your time and for joining us this afternoon. So how would you describe the current market sentiment leading up to the Minister's finance budget speech? What indicators are you monitoring closely?
Well, if you look at the overall market at the moment, we aren't doing too much, in terms of negativity right now. And I think that's partly due to the fact that the market's pretty much looking for, some kind of outcome that's going to be, I think, reasonably stable. So it's neither up nor down at the moment. The overall market is basically just about 0.01%, or 1% up at the moment. If you look at the different sectors, resources are holding us back a little bit today. Financials are actually the best performer, up about 1%. And financials is usually an indicator of the overall, confidence in the economy. The rand as well, if you look at it, is not doing that badly at the moment. We are sitting just about, in the 1850, 1840 level. And I think that also indicates the market is basically just holding, course, or just holding steady, waiting for some, confirmation of either good or bad things from the budget.
So speaking of that, markets looking for stability, what are your key expectations from this upcoming speech? Are there specific fiscal measures or policies that you anticipate that could impact on the markets?
Yeah, so look, I think obviously the important thing here is taxes. As a investor, you know that the only two things that consistently have been shown to affect the stock market has been, both the taxes and interest rates. The budget deficit is, getting a little bit out of control at the moment. We are looking, at a budget deficit that has been, climbing to an extent that we are now spending, as much on, interest payments because of the debt we have in the past, as we do on some very key segments of the budget or departments in the government. This cannot continue. If we were able to go back in the past and not borrow that money, that money would now be available, that interest payments would now be available to spend on other things and, reduce our demand for, towards borrowing in the first place. So I think taxes are number one. Then, of course, as a investor, you're also going to be looking at things like, for instance, exchange controls, things like allowances for, things like tax-free savings accounts, etc., which obviously are important for, anyone making an investment decision going forward.
And of course, macroeconomic factors are one that we should also be looking out for. How do these, such as inflation, unemployment, and GDP growth, just influence these expectations and the potential market impact?
I don't think inflation in the short term, unless you're looking at personally borrowing as a thing that's going to be basically making our inflation a little higher. But I do think that GDP growth has to be factored in. I think that you're looking at the overall growth in South Africa. I think we had a slight upgrade recently for the growth prospects for 2025 to about 1.8%, up about 1.5% or so. But even a 2% growth rate, which is in excess of what they're expecting for this year, is insufficient to get South Africa out of the current economic situation. To get unemployment lower significantly, you would need growth rates like 4 or 5% at a minimum, and preferably something close to 7-8%, like you see in places like India at the moment, or used to see in China like a few years ago. That is the kind of growth rates we need to see in South Africa. What could be done by the government to do that? Unfortunately, it's infrastructure, it's reducing regulations, it's basically making sure that the country operates in a manner that supports business. But there's very long-term, I think, prospects. There's very long-term goals. You're not going to fix infrastructure. You're not going to fix those kind of things in a single budget speech.
Well, you make mention of infrastructure. Any particular sectors that you believe will be most affected by these budget announcements? Are there particular industries that you particularly will be looking closely at?
The thing that we probably need to look at more closely than the other is electricity and, transport, or especially the rail and the port system in South Africa. That's actually holding us back quite significantly. I know Transnet tried to go out recently and tries to raise funds from some of its customers to try and get itself back in shape. But I think that is the two aspects that will have the biggest impact on the economy. I do think that other things, of course, like education, longer term are important. I think the one real thing that might concern the market is what's happening around healthcare. The national health insurance is something I think that is very scary for the market, quite frankly. I think that is something that we also have to watch out for, because it might not have a positive effect, but it might just scare the market if some of the forecasts we put forward are a bit too optimistic or aggressive.
Well, we just saw there an address by SAFTU's Zwelinzima Vavi speaking to the protesters of Cry of the Excluded, and he was speaking there about value-added tax and how it's a regressive tax system that impacts more of the poor than it does those that have money in South Africa. And they're also speaking on the history of tax. Do you think that the minister would make any changes to tax policies, and how do you think these are expected to change investor confidence and behavior as well as the market performance, should there be changes to any tax policies?
Well, I do think that in terms of VAT, it's the reason that we have to go and rely on VAT is unfortunately that already the progressive taxes, the taxes on income, the taxes on things like companies, etc., already near pretty much what the limit internationally has shown to be. If you look at the upper level of income taxes at 45%, once you get to about 50%, you really start to see quite negative, undesirable outcomes coming through, because people effectively start to look to avoid taxation more than actually any income, because they're losing more than half their money to taxation. And I think, unfortunately, given the current fiscal situation in the country, something like that has to be, a part of the overall budget. I do think that, adjustments could be made for things like, essential items, certain food items, etc. But the more, exemptions you put into place, the more difficult it becomes to manage the system. The good thing about a simple system is it's very easy to manage. It's very easy to basically, audit and so on. When you have more and more exemptions coming into place, it makes things more difficult. But like I mentioned, when it comes to taxation, rules around retirement, rules around income tax, rules around company tax, dividends, etc. These all play a huge part in terms of how the market values stocks in the country.
And any possibilities of the zero-rated basket being increased?
I think that's very likely to happen. I think, but like I said, when you have these exemptions, these zero-rated things in the basket here, it does make, which was monitoring and basically managing the system more difficult. If you didn't have, all the exemptions in the tax system, you could have the entire tax, booklet be in one page. But, by having all these exemptions, yes, it does make things in some extent more efficient, but also it includes inefficiencies like, the need to have, special consultants like tax lawyers, etc., helping you through these systems. So I think, we probably do want to do certain, to zero-rated things, but it's going to make, compliance, monitoring, etc., more difficult.
We've seen the recent diplomatic spat between the USA and South Africa over the last couple of weeks. How do you think the budget speech would influence foreign investment in our country, and what factors do you think are critical that the minister should be speaking to in terms of attracting or not deterring foreign investment?
Look, I think that's maybe a longer-term thing that the country wants to get. If you get growth rates up, 7-8%, you can have, as many negative, scary things in the country as you want to in terms of international investors. They will still come. The example I give to you is China. The Chinese government basically has significant restrictions in terms of what foreigners can invest in. There's even been, cases being argued that, when you do something like, for instance, build a factory in China, they often will steal your intellectual property with the assistance of the government, etc. But people still went there. Why? Because we had, significant growth rates. The best thing that the government can do to basically boost international investment is grow fast. But I think also you mustn't overestimate just the impact of the current administration on the South African, economy. Donald Trump will be gone in about 3.5 years, just about, or 3 or 4 years, basically. And in that time, yes, he can, kind of hurt the relationship between South Africa and the US. But I mean, this is a relationship that's continued for decades and will continue probably into the future centuries. And so small blips like this are not going to be something that you want to, overemphasize.
Right. Lastly, Viv, what advice would you give to individual investors in light of this upcoming budget speech? How should they prepare for any potential market changes?
Well, I mean, obviously, you need to look at what the changes in taxation are going to be. People should realize that the number one expense in anybody's life is the tax that they pay. You're not going to spend anything on your house or your car or any kind of other thing in your life as much as you give to the government every year. So understanding what the taxes are that apply to you and how to basically have the best avoidance of these things, not evasion, avoidance. It's important to note that. You pay your taxes, but you avoid paying the highest taxes by structuring your taxes or your income or your investments in a particular way. But also, I think, do look for the opportunities as well. In the past, government has put through certain things like the 12J program, etc., that have been, opportunities for investors. And Obviously, each goes, we need to look at what the new kind of opportunities are going to be in the budget, but it's not always going to be just a case of cost. There is opportunities available when any kind of major change is happening.
All right, Viv, thank you so much for your time. We certainly do look forward to that budget address and what the markets are going to react like towards that address. Thank you so much. That's Viv Govender from Rand Swiss.